Hello.
Yeah, can you hear me?
Yeah. Hi. How are you? Good afternoon.
Good afternoon.
So, how's the Saturday weekend? Sorry to trouble you on weekend.
No, that's not a problem. So,
Yeah.
I have
Okay.
work all day.
Okay.
So,
So you treat us like novice, and and yes, we are novice in terms of the system, because day to day we have intraday we are not doing it. We want to start with you. So far,
yes,
we have learned and we have done and experimented the writer, the call and put selling.
okay.
So especially today's circumstances, for last 2 months, it has been totally unpredictable. So whenever we are keeping positions open,
No, that's the thing.
the
That is
results are negative.
exactly. So, you can't like keep your positions open. Always there is something happens which in the first hour, then something else happens, and then again something else happens.
So don't know, you just cannot gaze.
Yeah, and it's very rare that the market will follow only one side. So it's very rare. So that's why once you see that you have made like Nifty went or Bank Nifty went, like for Nifty, if you see that you have gained 52 or more than 50 points, so I think it's best to close the position there. And yes, if the position is very our market is very volatile, then you can expect more points. So the very first thing is that you should just check this OIPCR. So that's the put call ratio. So what do we
Mhm.
mean by put call ratio? That is put. So I hope you can see my screen and you can see me writing.
Yeah, it's clear.
Okay.
Yeah, it's clear.
So
Yeah.
yeah.
So
So
number of puts
yeah. So
the
what do we
number of
mean
puts
is put
divided by number of
call.
calls, right?
So if this thing is lesser than 1, so that means if you just cross multiply, put is lesser than call. So call side is heavier than the put. So that means more short positions have been made on the call side than the put side. But that's not like a theorem, or it's not a very perfect thing that whenever this happens, it's like something you can be very sure of. So what my experience tells is that if put by call, just give me 1 second.
Yeah, sure. Call writing and put writing. Put writing is less than, so be.
Yeah, sorry for the interruption. So yes, put is lesser than call, so that always doesn't work. Like if you see that 0.99 is the put call ratio, so that is lesser than 1, but that doesn't imply that I mean the call side is going to win or call shots is going to win. So because what I consider is like if put by call ratio is lesser than 0.8, then you can like say that okay, we can short the call side.
Less than.
Mhm.
Just give me 2 minutes. The
No,
delivery.
no, no. Yeah. not issue. Understood.
Yeah, so let's continue. So, yes, what I consider is if the ratio is 0.8 or lesser than that, then it's you can like safely short the calls. Okay, and that too, if you are risk averse trader, then you should like wherever Nifty is, suppose Nifty is at 17,200, then if it's on Fridays, then it's I mean very less chance that you will the premium will decay. I mean premium decay is very less on Fridays. So the most of the premium decay starts from Monday or from the next day onwards. So you can short above if it's Friday, then plus 300 you can go and safely short. And if it's so that means 70,200 if Nifty is there, then you can go and short at 70,000 500. And if Nifty on Mondays or Tuesdays or Wednesdays, so then Wednesday is a very special day where premium decay is high and the Thursday is the expiry. So Thursday we will go near about like 100 or 150 plus 150 on Thursdays on or basically what on the weekly expiry or the monthly expiry days. So monthly expiry, be very careful because it's monthly expiry. Everything is going to end, so market will be very volatile. Okay, and on Mondays, Tuesdays, and Wednesdays, you can go and short at plus 200. Okay, and now suddenly, if you see that, okay, this ratio is like in increasing mode. So from 0.8, it went to 0.9, and then it's increasing. Okay, and if this ratio is more than 1.10, then we can consider a bullishness trend. Okay. So that's the overall view, but this is not like always works or always something this works. Just it gives you a view. Okay. So yeah. So this is what is being told here. This OIPCR. Now the next thing is the intraday. So it consists of many such data points, and it gives you again an overall view that what is the intraday. Like this will also change during the intraday. It's not fixed, but at that moment, what is the intraday view? It will tell you.
Okay.
Okay. But yes, again, I'm saying that these two things are to give you the view.
Okay. Overall view. They are not the confirmatory.
No, there. I mean, in
Just
stock
indicative.
market, nothing is. You can't say that if this happens, then this will always happen. There is nothing as such. So, yes, but what you can do is they can help you in your view. Okay.
Okay.
Now the next thing is here, which is the premium decay. This is very important. This thing is important. You don't have to notice this and this. Only you have to notice the conclusion. What is the conclusion going? So it's according to which side the premium decay is more, it will tell you. So suppose on the put side the premium decay is more, then it will tell you bullish. Because if on the put side the premium decay is more, so that means call shorting is going on the put side because their premium decay is more. And vice versa. Like if on the call side, if premium decay is more, then it will show you bearishness, because if call shorting is being done on the shorting is being done on the call side, then market will have to go down.
Yeah, call shorting is bearish and put short is bullish.
Absolutely. Like here, if it shows bearish, then you know what to do, call short. right? You don't have to relate like that. Whatever be the market view, it will tell you here.
Okay.
So the market view, if it's bearish, then you know what to do. If the market view is bullish, then you know what to do. Yes, and
Okay.
yes, shorting is that. But if you want to buy, then you have to check. You have to go and in the option chain, you have to check the IV. If IV is greater than 18, or I would prefer greater than 20, it's good. So then it's nice to go for buying, okay, according to the view.
Okay. So the IV is more than you should buy, or you should.
Yes,
sell it?
because if it's a volatile market, then chances that the premium decay will be, I mean, less. Okay.
Mhm.
And also the chances is that the premium will get, I mean, as IV gets higher, the premium also gets higher. So
Correct.
yes, even I mean, I have seen on certain days, like just before the expiry day, when IV was like at 30, so then the premiums were very, very high. Okay, so compared to the other days before the expiry. So IV plays a huge role in the premium.
Correct. So so why you are suggesting buying? Because it will involve less money.
No. It because I mean,
Decay will be less.
I mean, I have seen that traders are always finding when to buy because it involves less money. But if you, I mean, if you buying means like I have seen that if you go for buying, then it's very risky. But if you are going for selling, then almost like I mean, every time you will be profitable. So I always
Yeah,
prefer
correct.
I always prefer selling. But if you still want to go for buy, then that is the case when you should go for buy. Now, yes, coming to these things, that is here. This column is these two columns. That is the interpretation of the call side and the put side. They are according to the previous day. Okay, so during the intraday, you might not like view these columns. What you have to do is you have to view the IV conclusion column. So like here also in Nifty, Nifty is at 17,100. So you see what is going on in the IV conclusion column here.
Mhm.
This will tell you what is happening. Like for example, here at 70,100, you see at the very end short covering was going on. So at the instantaneous movement, what is going on there, it will show. Okay. And if it can't
Okay.
conclude, it will show you no conclusion.
Okay.
So that's how this gives you a view like what is happening. And here, this for the scores. And yes, I have also introduced this thing here. So this thing, so all these things which are above this one, apart from the score, so that one is secondary. This, I mean, all these are secondary. So this first, let me tell you what is this. So this is according to India VIX. On that day, yesterday at the first hour, India VIX was 18.72. So according to that, what could be the probable market range? So that's what we determine from these values. Okay.
So that's determined in the morning, or
No. It's the overall range, the minimum and the maximum. Yes, it can be broken down, but it gives you a view like at most where can the market go.
so one standard deviation. This is one standard deviation, or what is, how do you?
Sorry, I can't hear you.
This is one standard deviation or two standard deviation?
Oh no, this is like 2 standard deviation.
Okay. Okay. That's good enough.
Yeah. So
So this range is like, the continuously changing in your display, or this is in the set in the morning?
no, it's like static. Once it's
Okay.
fixed, it's static.
Okay.
So these are the secondary things, and for the scores, what happens is you see that in the first you get to I mean there will be one trade in the morning, so that depends on what the score is. So if the scores are going negative, then I mean Nifty will go down or Bank Nifty will go down, and if I see that both these scores, Nifty and Bank Nifty, they are in opposite direction, then I don't take the trade. If they are in the same direction, if they are both decreasing, then it's I mean it's, you can surely say that okay, this can happen with probability greater than 95%. So
Okay.
yes, so that's the thing. Now whatever like happened, suppose you saw that the scores went negative, you can go for call short. And yes, do not expect like if Nifty is going down, do not expect it to go down and down again. So you have to like, if 50 to 60 points, if it goes down, then you close your trade. So because again it can reverse,
Okay.
and after like from 11 p.m. onwards, it can like be like it can go sideways. And yes, now from the score, how to interpret? So from the scores, if you see that the scores are like moving in one direction, then you can go with that direction. If you see that the scores were increasing, but like it came to the 20s and 30s and then it got bounded there, the scores are not further increasing, so then you know that I mean then you if you are I mean in some trade, then close your trade and wait for further signal, and if you're not in trade, then just observe from there, that is then market will be bounded from there, and until unless I mean some exact decision has been made on which side market will move, so till then scores will be bounded. So that's when the scores are bounded. And suppose the scores were negative or positive, it went up to 0 or it went down to 0. So that means when it goes to close to 0, that means the pressure on both the sides are equal. That means on call side also the pressure like the put and the put short, so they're providing both the same pressure. And so we have to wait and I mean let them decide like which side will win. Okay,
Mm-hmm.
so that's the thing, like if scores are increasing or decreasing continuously, then it's the same direction. If the scores are increasing or decreasing and then got bounded, then market will be bounded there. And so what are the I think these are the cases. And if the scores are above 90, then uh, it's, or if it's below 90, negative 90, and if it's above 90, then above 90 means overbought, and below 90 means below negative 90 means oversold.
Mr. Das, यहाँ पे थोड़ा सा background. My wife, Dr. Nikita, she is with me.
Hello.
Yeah, hi.
I will just will like you to repeat this just to understand this indicator actually.
So can you? I think she need. I have seen your video, but she has not seen. So in the morning when the market opens, the opening point is a 0 point, right?
No, the opening point will not be the 0 point. So I just wait for like till 9:21 to so that the big players have made some positions. Okay. So
Mhm.
Okay.
yeah, that's why I start my score at around 9:21 in the morning. And yes, so till then, whatever the positions have been made, according to that, the score will be shown. But please do wait for like at least 15 minutes from them, then, I mean, from 9:21, because what happens is that the first, sometimes I have seen like these few days, I have seen that the first 10 to 15 minutes or the first 15 minutes, some false or fake positions are being made to,
Mhm.
yeah, to,
This, this guys.
yes. So that's why we should wait for till like 9:40, before the 9:45 candle, we should wait till then. So I've seen that, I mean, I mean, we get very accurate result if we wait till there, and then if we take our trade until 10:30, we can like close our trade and be profitable. So and you
I
just
see.
have, yes, you are asking something.
No,
Oh,
I don't
okay.
think it's something somebody else.
Yes, and then I mean till 10:30 or 11, the move comes, and then you have to close your trade, and after that market will be like boarding sideways. So I mean, very few days it might go in some direction, but almost 80% of the days it goes there. And so how to determine that? So you have to see that whether the scores are like, if the score went negative, so is it going further negative, then you can continue with your position. Otherwise I would prefer to close like by 10:30 or at max 11 a.m. And then again we should look for the next sign from starting from around 12:30, we should observe. And so like yesterday, if you had observed here, like 12:44, you see all of a sudden the score went negative here. And so from that point, the put short position started closing. And so that point, the preparation started. And so that will give you a signal, like if you try again, start observing from 12:30, so that will give you a signal what is going to happen in the last hour. But sometimes you also have to keep your patience till like 12 2:45 or 3 p.m, because the usual, like I have seen that the correct move is coming sometimes at 12:45 or 3 p.m. But yes, it also comes at around 1:30 or 2 p.m. So no one can surely say when it will come, but yeah, it's going to come. Yesterday, as I said, that in the morning I knew that the same pattern was being followed. So yes, so all these things, and rest is experience. So there is also something called experience. Like yesterday I told you that since the same pattern of Thursdays was being followed, so everyone will be bullish and the big players will take advantage of it. And that's what happened at the end of the day. So that's
Yeah,
how.
I remember.
Yes, so that's what experience tells you. So that in time to time, I'll be sharing in the group, or I'll be tweeting. And rest, whatever be the score interpretation and whatever signal I get, I'll also be sharing, and you will be learning along with it. I don't only share the interpretation, I also tell why. So always, if you see that Nifty score is going into some direction, and you have like, you know that okay, we have got the Nifty direction, then to confirm, go for Bank Nifty also, because Bank Nifty also plays a huge role in Nifty. So like at 12:44, so if we go and check Bank Nifty score yesterday, so here if you'll see that, yes, you see from Bank Nifty score was also decreasing at around that moment, 12:36, and as you can see here. So I mean, if both the scores are in the same direction, it gives you an idea that, okay, so my trade can be like I can be successful with a probability greater than 95%. So that's what it is. But till now, I haven't seen that when both the scores are in the same direction, market is going in the opposite direction. But still, I say 95% because nothing is like 100% in stock market. So
Correct.
yeah, we should be practical about that. So yes, if you have any questions or if you want to know something.
Yeah. So before that, like, can you show us the graph,
Yeah, sure.
Nifty graph or Bank Nifty?
So this is the usual Nifty graph that you can also visualize from,
Correct.
that you can like see from any.
So you have made like some zero line also.
No.
Yeah.
Oh, here. Yeah, right.
Yeah. So that zero lines is what?
The zero line
And then,
is the
like,
score.
you made
Just
like,
the
the plus 100 and minus 100, right? So this is what big zero is a everyday start, like, what is zero is means start of the day.
No. Zero is not like the start of the day. So usually near about zero it will start, because both sides in the morning positions are being made. But on which side positions are being made? From there on, I mean, more positions are being made, and there are also other conclusions, IV and premium decay and all those things considered. Then the score will move. But when you are near about zero, then you can understand that both the sides pressure is the same.
Okay.
Okay, so that.
So this is live updated, because
Yeah. So this is like as the score updates, the graph updates. It's all according to this score only.
So and for me, I'm very much comfortable with this graph kind of thing.
Yes, sure. If you're
So,
comfortable with the
the
graph, you can
individual choice, and so when you say minus, numbers are going down in the minus, then we have to do the call short, right?
Exactly.
And if it is going up in plus side, we have to do the put short.
Right.
Also, these number does not signify the weightage kind of things. Say 51, because I've seen many places 51 point, you are getting the 51 two different places, or 51 and 50, but the number, the index number is difference is very high.
Oh, yes, that will happen because it doesn't depend on the index. It depends on the pressure from the call side and from the pressure from the put side, and also the futures long and short positions.
Okay, so these numbers are based on, like, the tug of war kind of
Exactly.
future,
Right. Absolutely.
So okay. So if I since I am much more comfortable, like, because it gives a clear direction, because numbers sometimes you are not used to, then you can make mistakes, but this clearly signifies it's going up and going down.
Right. Absolutely.
So say yesterday, give me just, like, out of yesterday's what would have been the
Yes,
right
yesterday
move,
you can
so
see
that,
like
in the morning,
here.
like, as you could.
Yeah, the morning score got deleted because I made some upgrade in Nifty, but the Bank Nifty scores is there from the morning. If you want to view the morning score.
No, not an issue. Any example, Bank Nifty.
Yeah, so morning score, you
because,
see that
finally.
Why I told you to wait till 9:45, you will get to know here. Bank Nifty, you see the score was positive, but not that much. So oscillating here. Okay, so then it went to zero, as you can see. It's, as you said, it's like a tug of war. Okay, and then you see it went to negative 16, and so till 9:36 it became like clear, and that put shorts were going on, and then again market tried to reverse, but again you see here till 9:45 or 9:46 it was very clear that negative 33 was the score, and so call shorts were happening. Okay. And then market went like 50 points down, and so that's it, where you should close your trade. For Bank Nifty,
So no, I just can you candidly say, like, if you would have taken a trade yesterday,
yes.
for example, then you would have taken it at 9:36.
Okay, so for that, I think, let me see. I have told in the group.
9:45. You are saying, like, no.
Yeah,
Wait
I
for
saw
the
the
9:45
Nifty
or-
score is currently not there, so that's why I let me see when did I
No,
see. Yes, you see that I told at 9:30 a.m. that put shorts were happening.
correct.
Yes, if you go and look at the messages, so at 9:30 I identified. So 9:30, if you look at the Bank Nifty score here, it's 8 here. From 13 it decreased to 8, and if you I have to see, like, go and check the live streaming that I did yesterday to check the score. But yes, as I remember, Nifty score was negative and put shorts were going on. So when I will be able to determine exactly, I'll obviously let you all know in the group, and so you can observe and you can understand. So I mean, this question, I think it will be if you learn it practically, as I say, like yesterday I told at 9:30 a.m. Even if you go, and I think you can check out the previous messages also.
9:30 yesterday, you said, like, 9:30 put short at 17,300, 17,200,
Right.
100, and 17,000.
Right.
Put short. So how did you decide, like, put short is happening, like,
Yes. So because here, Nifty scores were also Bank Nifty scores were increasing in the first half, and then Nifty score was also increasing in the first half, and then again at 9:44 I also told that call shorts were also happening, and then yes,
yeah.
and
Straddle.
then I said that it's a short straddle that is being formed, because if the positions that were made in the morning, like the put shorts, if they were not being closed, so then it's a short straddle.
Yeah, you said 9:44.
Yes,
Short straddle.
9:44. Yeah, I also said call shorts are happening, and the other side positions are not closing, so it's a short straddle. And when short straddle happens, both side movement occurs.
Okay. So it oscillates between.
Exactly. So one side will be profitable,
Direction and
right, the other side will also be profitable. And short straddle usually happens on Wednesdays also, because both side movements occurs on that day, and easily they could eat the premium. And for that reason, Wednesday is a very special day for short straddle.
so they eat both side premium.
Yes, they would make short positions
how
on
do
both the
they?
sides, and yes, they would make movements on both the sides to eat the premium.
Okay. So once one time, like, when it goes up, then they will close the put side, and then
Yes, they would
come
close
down.
the put side, and yes, as they did even yesterday also. So it went up, they closed the put side, and then market came down. And also, if you notice that, okay, suppose they have closed half of their put short positions and they couldn't close the other half. But in that situation also, you would see that, suppose once market has went down and then it came up on Wednesday, especially I'm talking about, on those days you will see that the premium, like suppose Nifty is at 17,100 and Nifty went to 17,000, and then again in the second half, Nifty came to 17,100. But you will see that there will be a very significant difference between the premiums. For the on the call side. Okay, so because even if market is coming up afterwards, then also the premium won't reach the exact value it was in the morning.
No, I didn't get.
Okay, so let me suppose suppose this is 17,100 and this is 17,000. Okay, Nifty was at around here, and suppose it came down and 17,000, and in the morning when call shorts were going on, then you would see that suppose, for example, the premium was 100. Okay, at 17,100 call shorts were going on and the premium was 100, and Nifty came down 100 points. So the premium went down by suppose 30 to 40 points, and now let's say suppose then here when the market is at 17,100, premium went down to 65. Okay, so they ate 35 points in the premium. And now what, I mean, you have to understand how they try to make a fool out of us. That is, what they will do is all of a sudden it will suddenly reverse from here, or what they will do is, if they try to close, if they haven't tried closing their positions there, they will try to close their positions by going further little down by 30 points. Okay, so when it goes down further down by 30 points, then the retail traders, they think that okay, now we can very safely short the call on 17,100, and then when they try to enter the sell position, the big players, just exchange their sell positions with them, and they just go away, and then the market reverses. So this is one scenario. Now, if you see that the big players are making huge positions, suppose they were only able to exchange half of their positions. Okay, so then the other half still remains. What happens is that suppose market reversed and market again came to 17,100 at suppose 2 p.m. or 1 p.m. or whatever. Then you will notice that in the morning they made their short positions with a premium, suppose on an average premium of 100. But at 2 p.m. when market went up there, then you'll see that the premium 100 will not get, it decreased to 65, then again it won't go to 100. Okay, at 2 p.m. you will notice that though market again came to 17,100, premium will be at around suppose 85 to 90. Okay, so still if they haven't been able to close their positions, half of their positions, so still those positions will be profitable, but with less profit, but it's profit is profit. So they will be profitable, and the other half, they have already made a huge profit. So on an average, they just work like that, because it's not like us that we just do the sell or the buy and the what should I say? Like the whole trade gets accepted. So it's not like the
so averaging, they do the averaging every stage. They
exactly. Exactly. So
some places they make huge profit, some places they make limited profit.
Always they go on like average, because since their positions are huge, they can't do like that. That is, when they place their orders, it doesn't get accepted like what happens with us. So it's a different scenario there. So that's the reason, because if they are trying to sell their position, like suppose they have sold in the morning, they have shorted call. Then when market is at 17,000, then sorry, 17,000 here. When market is at 17,000, then if they are trying to close their positions, then there are two options for them. That is, one is the opponent position, whoever has bought with them. Okay, so it's a contract that I am selling, then someone is buying.
Correct.
So whoever has
Correct.
bought, if they want to close, then the position gets closed. Okay, now whoever has bought,
Correct.
if they are not closing, and simultaneously if new retail traders are not coming to, okay, now the other option is new retail traders are coming on, or whoever is coming to short, then what they will do, they will just exchange, like I will just go, so there is a contract, I have made short, someone has bought, I now want to close my position, but the person who has bought doesn't want to close their position. So I see that someone new has come and they want to sell. So what I'll do is I'll say to them that I have already sold, I want to exit. So now you come and take my position.
So basically, so lower level, they will transfer it, the contract.
Exactly. They would either transfer the contract or either they would close their contract. So that's how.
So how do they do this?
No, that is they would place their trade. So that is how their trades would get accepted. Now, suppose if both the options are not working, so they won't be able to close their trades. Suppose half of their trades they have closed like this. Now, further, they don't get any newcomers or they don't see that the buyers are closing. So then they have to wait, or then either they wait or either they do something like what happened yesterday, that they would just make a sudden fall. Okay, they would make a free fall. So in free fall, the buyers who bought call, they would just see that their premium is getting decreased by 70 to 80%, and then they would just lose hope there and just close their trade.
Okay.
So yes, there
So
are
that is called
yes.
Stop loss hunting.
No, stop loss hunting is something like this. That is, you see that, let me, so for example, this one, they have shorted at around in the morning, call short at 17,100. And now they were sitting there very comfortably. And now what happened was more and more retail traders have come here and also joined with them. So then what they will try to do is they will just just reverse Nifty and go up. Okay, and now there you'll notice that either it will go up to minus 30 points, so that means 17,070, till there they will go to hit the stop loss, or otherwise for the sellers I'm talking about, or they will go above by 20 to 30 points to hit their stop loss, and then you'll see that again market came down. Okay, and so this happens a lot of times, and most of the retail traders would finally think that, okay, I was correct, but you see these stop loss huntings, for that I had to get out of my trade. So that's how the stop loss hunting works.
So this is thoda zyada ho raha hai, like nahi clear ho raha hai. So we separate this stop loss hunting. We'll keep it aside. You were saying, like, 17,100 sold at 100. Now it is come down to 65 ka premium at 17,000. And then there are two ways of exiting. One is either exit at 65.
Yes.
And the other way, thoda वापस ऊपर लेके आएंगे वो.
Exactly. थोड़ा ऊपर लेके.
And 85-90 पे वो exit कर लेंगे.
Right.
By transferring to somebody else, or कोई buyer मिल गया तो उसको retail buyer को
right.
बेच देंगे.
Right.
So this is a one thing. So in that case, like, the bulk buyer will do like this. So we are trying to put a anchor on the big buyers ship. We want to behave just like big buyers, right?
Right. You have to think according to their mindset.
We are trying to copy their mindsets, right?
Exactly.
The strategy is like that, or what is the
Yes, the strategy is absolutely like that. You have to read how their mind thinks.
So in this case, like, this example, so how we would have taken numbers, how the number would have helped. You are numbering that.
Yes. So
scores.
yes, if you go and check out last to last day's videos or whatever, something I don't remember exactly which day, but that day when Nifty came down, and then again I told that the stop loss hunting was to happen, and then you would have noticed that suddenly it just reversed, and the score went down to -85 as far as I remember. And then the score started decreasing. It went to the 60s, -60s, and then 40s and so on. And then you would have seen the stop loss hunting. So that's how the scores will help you. That is, they would like tell you that the reversal is near or market is going to reverse. Okay. And these are also the levels which you should watch for. Like when it just crosses like any multiple of hundreds, and then you should watch for the next 30 points. So if it reverses within that, it usually, if you go and look at the charts, it usually reverses from those 30 points. And if it comes down more than that, then usually the move continues.
And you are talking everything intraday, right?
Absolutely.
So how, one thing, like, I'm really confused.
Yes.
How in intraday because the same day you're going to close the trade, so like, how premium decay will help, because in one day hardly, like, except Wednesday, there is no much decay. So how it helps the option sellers?
The option sellers, yes, can gain. Like if you see that in the morning, whichever side Nifty moves, it will move like 50 points to 60 points at least. And so your premium for that 50 to 60 points, premium will decay for around 20 points. Okay. So yes, that's how you can obviously gain. And if you see that like I have notified you about some levels, so resistance and support levels, and if you want to like go and short above that level, so you can also do that for overnight trade positions. But yes, do remember anything can happen. So if you are keeping overnight positions on selling side, so do one thing, that is, suppose you are shorting at 17,100, then obviously go and buy for 17,200. So if whatever happens, I mean, Nifty goes up by 200 points, or it's a gap up or whatever, then I mean, at most you would just lose 100 points.
So that spread you have to create, right?
Exactly.
You are saying overnight one has to create a spread and limit the
right. Overnight positions always hedge them. And on Thursdays, hedging also works and you get a very nice this thing that is your margin benefit. On Thursdays, if you hedge, you'll see that, I mean, you can sell one lot of Nifty for around, like, I think 50K, or maybe sometimes I've seen for 30K, you can sell one lot of Nifty.
Okay.
If you are hedging.
So, no, I didn't get. So the hedging is meant for the next day or
No,
not,
you see, if you want to
not
take
for
the
the
margin
intraday.
benefit, you can hedge. Okay. If you want to, I mean, be safe, you can hedge your position overnight. So you can sleep well overnight, so that you know that your positions have been hedged. So these are the two benefits of hedging.
My question is Thursday is a closing, right? Every Thursday is a
Yes, every Thursday is closing,
weekly
and
closing.
right. On other days, you will find that if you hedge per lot, it's like 50 to 60K if you are hedging. Depends on how close you are hedging and how far you are hedging. Like, suppose you are Nifty is at 17,100 and you are making call short there, but you are buying at 17,500, then margin benefit would be lesser. If you are shorting very close, like 17,200, then margin benefit would be higher. So that's how it works. And on Thursdays, since it's expiry days, so it usually, that 50 to 60K usually goes down to 30K.
So hedging for the same day, so that
I mean, for those who just want to take the margin benefit, for them, I would advise.
no, I'm getting confused about the hedging for the which expiry, like Thursday.
No, suppose
today is a Thursday.
Suppose today is Thursday and you have 5 lakh rupees. Okay. Now, if you just now Thursday, especially for selling, because premium will decay. So now with 5 lakhs, if you just go and try to sell, you will see that you could just sell at max, I think 3 lots.
5 lakh. Okay.
3 or max to max 4 lots, not more than that.
Correct.
But if you are hedging, okay, that means if you are also buying above, like if you have shorted somewhere.
Oh, got it. Now, thank you. I got it now. You are saying, like, just to minimize the margin for the
Exactly.
same, but even the intraday trade, if you hedge it, then the number of calls you can take more trades.
Exactly.
More
So
you can trade.
now you see that at 30K, if you are hedging, then per lot it gets down to 30K, and in that case you can almost sell around 50 lots.
Correct. Yeah. Appreciated that. So the one more thing, like the language you use, of course, the language is English, but like the when you it's like yesterday you said put short at 17,300, 200,
Right.
100 and 100. So
Right.
what was your intent, or what you are we have to do, or it is taking place?
No, it is taking
Is
place
it-
now. If you are a risk averse trader, then you would just go for put shorting far away than where Nifty is. But if you are a like risk taker, then you would just go near about Nifty and short.
Mhm.
So that's why I tell I tell the exact positions where the thing is happening. Like, for example, at 17,000, suppose I tell that at 17,300 and 17,200 put short is going on. So
Okay.
that is where the big players are making the put short. And suppose Nifty is at 17,300. So Nifty is at 17,300. And I tell that at 17,300 and 17,200 put shorts is going on. So that's why the big players are making the positions. But suppose you want to you want to play safe, then what you do is you go and you short at either 17,000 or you go and short at 17,100. Okay, and
Okay. Okay.
yeah, and if you want to hedge your position, then you
So
go to
that means like, if I have to take the trade, then I have to take the similar, like, just copy what the big players are doing. Correct?
right.
Okay. Okay. And one more thing, you said like the because the interpretation of your language or your directions or that should.
So I especially use the word stop loss hunting. You got the meaning, what it means.
Yeah, I got it.
Yeah, and put short, call short,
So
how do I?
how do you make identify differentiate between the fake calls and the real calls, or like stop out loss hunting or something? Sometimes the fake calls come. You said like it's a fake.
Yeah, so for those you have to learn about geeks, option
Greeks, yeah.
and
Yeah, I know.
yeah, you also have to notice about the IV, and you also have to notice about the volume. So that's all those things are already considered in the score.
Okay.
And yeah, that will determine. So just follow the score.
Okay. Okay. And again, like the original question, like the 0 point, I have not understood. Like what is
Yeah, the 0 point
that
means
is
both side pressure is the same.
zero line is what?
Zero line is like the at the tug of war. Suppose this is the rope and this is the 0 point. So if this and the flag is here, if the flag is at the 0 point, so that means both the side pressure is the same, and then you have to see, I mean, which side the flag is moving or which side the score is moving and which side is winning.
Okay. So that's a different line of difference.
Right.
Okay. And okay. One more thing.
Sure.
Like and after this all these detailing, I've understood. Can you like make convenient for the users both the graphs in a one graph, so the directions can be easily identified, that like it's up move or down move or something like that, with the different color.
So you want the Nifty graph and the score graph
Finally,
combined.
No.
Right?
Nifty and Bank Nifty together in a one because the points are same, right?
Oh, you want Nifty and Bank Nifty in one sheet.
With one sheet or one graph.
No.
So
yes, for that what you can do is
so
the Nifty and the Bank Nifty graph, you can just divide your screen into two parts, and in one part you can just open the Nifty, and in one side you can open the Bank Nifty. What I usually do.
Okay.
Yeah.
Okay, so you don't have
that's a
to
good
always
solution,
switch like this. You just divide your screen into two halves and do that. I think that would be better.
Okay. And these does they signify long unwinding or fresh short or long.
Yeah. So look at
Signifies.
for those, look at the IV conclusion.
So the extreme two side columns.
Exactly.
Call side column and
Right.
So how they help? Like, how can I can make like use of that? Like, what it signifies? Long
so the
unwinding
main,
happening or short.
exactly. So how they help is basically, suppose you have determined the direction of Nifty from the score. Okay. And also you are watching what is the IB conclusion. So what is exactly happening at those positions to confirm further. So it's just for confirming and to know what is happening at those positions.
Okay, so my strike price, then I'll see the IB confirmations, and then I'll come to know that what kind of trade taking place.
Sorry, I did not get your question.
So I'm just interpreting what you have told is I'll see the score first.
Okay.
If it is going up, then or it's going down, whatever direction I have noticed,
Yes.
I'm sure before taking any trade, I'll see my strike price in this chart, IV conclusion. If I'm taking on a call side or if I'm taking on a put side, IV conclusion chart I'll see, and I'll see my strike price. What kind of trades are taking place? You are saying that?
Yes. For confirmation.
So what is the meaning of yeah. See as you are saying 16,300. It is 1 second. It is say no. Forget that 300 because the IV conclusion is not there. Say wherever the say 16,700 fresh
Yes.
long and long unwinding.
Yeah.
So fresh. So long unwinding is
Unwinding means
seller
positions are getting
sellers they're selling, right? They're selling.
No. Unwinding means they're like the literal meaning of unwinding. They're closing their positions. Okay. So long positions are being closed there.
So the long position the and writer. This chart is based on the writers.
No. It's everything like the 4 positions. Either short covering means short positions are being closed. Long unwinding means long positions are being closed. Short, fresh.
Building.
Yeah. So here you see the word short cover. Okay. So short cover, long unwinding. These are the 2 words. And the other 2 words are like fresh short or fresh long.
No, so
Fresh short, fresh long is buying.
No, the long
Fresh short
buying,
is fresh
right?
short selling positions. Shorting. And the color will be shown accordingly. Like here, you see that short covering here at just notice at around, for example, 17,100. On put side, it's short covering means short positions are closing. So what does that mean? On the put side, if short positions are closing, Nifty will go down. That means signal is red, and you see it will be in red. But if on the call side, you see here, for example, 16,000, 1700, short covering will be in green, because if on the call side, short positions are being closed, so that means Nifty will go up.
So basically, the green is up direction and the red is down direction.
Exactly. The color will show you the direction of Nifty, but yes, don't take the colors of very far away, very far away strike prices. For Nifty, which side it will go, take the color of the near about strike prices.
Okay. Okay.
From the color you will get to know that the color is for the Nifty. So red means Nifty red or green means.
Got
I
it. Got it.
clear.
Sorry.
I hope it's
Yeah,
clear.
that's yeah. This is clear. And what is 1 second? I'm also opening your chart. I think so. Basically your this scores is a indicator, and you are generally, matlab, what is the protocol or what is the procedure you follow for the trades to take? And you give both the taking the trade also and closing the trade also.
Taking the trade, I take when I see both the Bank Nifty and Nifty are in the same direction. And and for taking the trade, it's not just any time you take the trade, you have to take it in the very first hour. Just wait for 20 to 30 minutes and then take the trade. And the next thing is when to close. Yes, when in the morning you have to be very careful, like market can reverse anytime. So 50 to 60 points, yes, I'm satisfied with that, I close it. Then whatever be the score, whatever be everything, I don't care. Like only the case in some days, this is the usual condition. In very specific or very limited number of days, you would see that suppose I have made call short and I see that on the put side, the positions which have also been made, they are further closing and call side positions is further increasing. So it's in my favor, then I wait for some time, that is for further move. But if you notice that, okay, Nifty is going down, but the put side positions are not closing. Okay, so then market can reverse, and so just close your positions by taking 50 to 60 points drop in Nifty.
So 50 to 60 points is a Nifty points or
right, Nifty.
And when it comes to the Bank Nifty, then
Bank Nifty, so I usually don't trade in Bank Nifty, so I'll have to check and tell you that. So for Bank Nifty, for in my experience, it tells me that 100 points would be enough. Okay, but still, don't take my words for granted. Like for Bank Nifty, for Nifty, yeah, it's 50 to 60 points.
Okay. And one more thing.
Mr. Das, I have a query. Will you be guiding us for first few trades before we get a hang of it?
Yeah, surely. I do that via the private Telegram channel. So that's why I have added you all there.
Okay. Got it. Okay.
So let's get hang of your whatever your directions first. And the other day, you have tweeted that you bought some call at a very good prices, very competitive prices, and then sold at a very high prices. And same thing had happened with me, but by the time, as you said, the big players, they threatened or they frightened us, and then I closed the trade, and then last 15 minutes, that 20-30 rupees premium shot up to 100 rupees.
Exactly.
And I lost so that is called operation successful per patient dead.
Exactly. That's
I did not earn
so for those type of days,
such a
Yeah, that's what I tell you. You see that if you had done, instead of buying, if you had done shorting, then you could have you could have had patience till the end. Because what happens in buying, because in buying, if the premium is suddenly decreasing to 50%, you see that you are making a 50% loss there. So you do panic sell then. But if you had done yeah, if you had done selling, then you could have you could have wait till the end. So that's how selling is more preferable than buying.
Okay.
I mean, you
Okay. So you
yes,
said like, the to increase the number of trades with the limited money, we have to take the spread, like, the call selling at
right,
17,000, then 17,100, 200,
right,
we should purchase again,
right.
or the put ka ulta karne padega.
Right, absolutely.
Okay. And so the days wise, you said like, Saturday, Friday, you don't take generally any trade.
Exactly. And especially this Friday was like the very first day of the next expiry as well as the monthly expiry. So data is very less.
Okay. So we should abstain that day.
Exactly. So I think that day is like, I've seen that, move, especially if you go and check out the Fridays. So some illogical moves also comes on Fridays. So that's why I usually try to avoid Fridays. But again, last Friday, I saw put buying happening at the last hour. I notified you all. So if something happens like that, I'll surely notify. But we should like stay away on Fridays.
So the put buying happening, so we should take the put buying.
Yes, or you can go for call short also.
Correct. The put buying, yeah, call short, yeah.
Yeah, but I mean,
yeah.
so if you are like
so directionally same direction.
Yeah, so if put buying is going on, still if you are a risk averse trader, then just go for call short. So some traders are like they would like to double their money or something like that, so they go for put buying on the special occasions. Yeah, so still again, I mean, if you are going for put buyings in those scenarios, don't go. Don't throw all of your money. Only take positions with the money that you can lose, because again, it's stock market, anything can happen. On the next day you will see that put buying happened, but Nifty is in the opposite direction, and then you'll see that after 3 p.m. the original move came and Nifty fell by 200 points, and so till then you won't be able to keep your patience. So that's why, like anything, since anything can happen, so better when we are sure that put buying is going on, then to be surely profitable, you can go for call shorts.
Okay.
So, and one more thing,
Sure.
how frequently we are supposed to see the charts? And like you said, the first trade should be around 9:45, and you prefer to exit around 10:45, 11. And then around 12:30 also, you said there can be some changes, right?
Right.
And around 2:45, because these days there's a lot of variation going on after 2.
Yes. So from 12:30 you start observing, and then till 3:15 you have to just wait, or you have to see what is going to happen in the market. So anytime the move can come. I mean, at 3 p.m. also the move can come. But yes, try to observe for the second half position from 12:30.
Okay.
And yes, if you are comfortable with like only one trade, then if you're profitable in the morning, just leave.
Sounds good.
Mr. Das, this is a serious business. So
Yeah,
we
sure.
will we will go to with the expert. We will follow initially your guide, whatever directions comes and advices come, we'll follow that.
Sure, sure.
And second thing, this nowadays, algo trading. So our indicator is nothing but the algo. It's a
Right.
only thing we are taking a trade.
Yes, only you are taking the trade, and in algo trading, like the algos take the trade and very swiftly they take and close the trade. Like you are emotional, you may think that Nifty can go up and down or whatever, but in the algo, if whatever the algorithm, whatever be the conditions, if it gets hit, the algo will close the positions. But when you take the trade, you don't have certain strict conditions. That's why we are emotionals and we think
Get
that
fooled.
this will happen, that will happen, and we keep on continuing and make losses. So that's what that's the difference.
Got it. I think you had given us a wonderful insight. Thank you so much.
Thank you so much.
Okay,
And
thanks a lot, and thanks for being my member, and thanks for believing in me. So this meeting was recorded. Is there any problem if I post it on my YouTube channel, this meeting?
1 second. Let me ask Dr. Nikita because
Sure, absolutely.
You can post on the YouTube channel, but don't write my name.
No, I won't write your name. I would just write that. Just I'm handholding my members. That's it.
Yeah.
No
You
problem.
can.
No problem. Sure.
If you are
Oh.
benefited, fine.
Yes.
Thanks a lot.
Mr.
Okay.
Das, could you add me in your Telegram channel?
Yeah, sure. So just send me your mobile number.
Yes.
Okay.
I'll ask Kamal to share it with you. Thank you so much.
Yeah. Okay. Bye.
So when you're in Mumbai, do come to our place. Stay with us.
Sure.
Okay. Have a nice evening.
You too.